Hey everyone, and welcome to This Explainer. Today, we're diving into something absolutely crucial, the foundational language of business. We're talking about financial accounting. Whether you're a seasoned entrepreneur running your own shop, or you're just kind of curious about how businesses actually function behind the curtain, we're going to break down these core concepts together. Let's jump right in.
Okay, let's dive into this. When you hear the word accounting, you probably picture a totally rigid, dry math chore, right? Just endless spreadsheets and punching numbers into a calculator. But actually, scratch that. Our source text deliberately, completely subverts that expectation. It calls accounting an art. I mean, think about it. It's about crafting a narrative, making judgment calls on raw data, and finding the hidden patterns within a business. It takes real human intuition to recognize revenue, account for depreciation, and figure out a company's true value. It's way more dynamic than just doing math.
Let's move on and see how this builds. So, what does this art actually look like when you're in the trenches? Well, it works through a natural three-step rhythm. First up is recording, literally capturing every single financial event as it happens. Second is classifying, putting those events into the right buckets so they actually make logical sense. And finally, summarizing. It takes the overwhelming chaos of thousands of daily transactions, individual coffee sales, bulk inventory purchases, the whole shebang, and boils them down into this beautiful, structured order so we can actually comprehend what's going on.
Now, when we strip away all that complexity, the ultimate balancing act of literally any business anywhere in the world basically comes down to two undeniable concepts. It's the things we own and the amounts we owe. That's it. It's a constant equilibrium, like a delicate scale that every operation has to manage just to stay upright and keep moving forward. And this brilliantly illustrates that exact tension. On one hand, we've got our assets. These are the things we possess and control, the literal engines driving us forward. But countering that, we have our liabilities. These are the amounts we owe to others, and they kind of act like a heavy anchor. Your business lives right in the middle of that push and pull, constantly negotiating between the things that fuel you and the things that weigh you down.
Now, what's really interesting here is looking at some tangible examples to anchor this concept. We aren't just talking about abstract, pie-in-the-sky ideas. We're talking about cold, hard cash and the physical machines pressing out value on a factory floor. These are the physical engines of value that your business controls. They are the very tools that allow you to generate future wealth.
But we've got to face the other side, liabilities. It's a stark, simple definition, amounts we owe. It is the direct, heavy counterweight to those assets we were just talking about. And honestly, you absolutely cannot understand your true financial health or the reality of your business without openly acknowledging the weight of these obligations.
So if assets and liabilities are the base building blocks of our business, we need to talk about the capstone that sits right on top of it all, the piece that holds the entire structure together. And that comes from a very specific place, the owner's money.
In accounting, we call this capital. It's literally the owner's money. It acts as the initial fuel that breathes life into the entire operation. Without this capital, those machines never get bought. The cash never hits the bank account, and the engine just never starts. It is the definitive spark for any business. All right, let's pick up the pace a bit, because a business isn't just static, right? It's a living, moving engine. So let's look at the day-to-day dynamic motion, income and costs. Every single day, your business experiences this constant pulse. On one side, you have revenue. That's the income earned from bringing real value to the market. But right across from it, fighting for attention, are expenses, the necessary costs incurred just to keep the lights on, run the machines, and pay your people. Revenue and expenses form the daily heartbeat of the operation, pumping lifeblood straight through the system. Okay, so we've structured our art. We've balanced our assets and liabilities, and we're tracking the daily heartbeat. But let's bring this right back to you. Why does this all matter? What is the ultimate payoff for unlocking this financial language and navigating this maze of numbers? So, the crucial point is that this exact structure gives us three massive benefits. First, tracking profit and loss, so you actually know if you're winning or losing the game. Second, paying taxes correctly, because let's face it, there are few joys in life quite as thrilling as giving the government exactly what you owe them and not a single penny more. And most importantly, number three, it allows you to make better decisions based on actual facts, not just guesswork.
Which leads us perfectly to our final thought. The ultimate goal of this entire accounting art form isn't just to have a tidy ledger sitting on a shelf gathering dust. The goal is clarity, and more importantly, action. So take a look at your own foundational building blocks and ask yourself this. Are your financial records helping you make better decisions? Thanks for hanging out with me today, and keep seeking that clarity